While the 98% spent this past week in a state of sheer panic, following the Warsh Shock meltdown, those of us in the 2% club were doing something very different. We were looking for the floor. We've spent the weekend discussing the $80 silver floor and resilience of gold as it pushes towards that $5,000 milestone. But as we open for trade this Monday morning, there is a third floor in the precious metals complex that is standing wide open. It is a door that most investors are walking right past, simply because they've been conditioned to ignore it. I am, of course, talking about platinum, and today I'm going to show you why the 2% Club is quietly looking at what might be the most asymmetric, undervalued, and misunderstood asset on the board in 2026. This isn't just about a price chart. It's about a mathematical anomaly and a geopolitical supply crisis that is currently hidden in plain sight. If you ever wondered what it feels like to buy an asset that is fundamentally 50% off relative to its peers, you need to listen very closely to the next 10 minutes. So let's start with the direct comparison. What is in it for you if you look away from gold just for a moment? Right now, with gold trading near $5,000 an ounce and platinum sitting at $2,100, the ratio is a staggering 2.37. To put that in plain English, for the price of one single ounce of gold, you can currently acquire nearly 2.5 ounces of platinum. Now, if you're new to these markets, you might think that's normal. Well, it isn't. Historically, platinum was known as the rich man's gold. For decades, it wasn't just more expensive than gold. It traded at a massive premium. In fact, for most of the 20th century, it was the ultimate status symbol of scarcity. Today, that script has been completely flipped. So why does this matter to you? Because the 2% Club doesn't buy what is hot. We buy what is structurally undervalued. If you believe in the debasement trade, the idea that hard assets must rise as global currencies continue to fail, then you have to ask yourself, which asset has the most catch-up potential? Gold has done its job. Silver has been the year's superstar. But platinum is the laggard that is currently coiled like a spring. Let's look at the data. If you take all the gold ever mined in human history, it would fill about 3 Olympic-sized swimming pools. If you took all the platinum ever mined, it would barely cover your ankles in just one of those pools. Platinum is 30 times rarer than gold in terms of annual mine production. Every year, the world mines about 115 million ounces of gold. For platinum, it's roughly 6 million. When you buy platinum at these prices, you aren't just buying a metal. You are buying a piece of geological scarcity that the market has temporarily forgotten how to value. The 98% see a price chart that hasn't gone to the moon yet, and they assume it's a failure. The 2% looks at the same chart and sees an entry point that our grandchildren will talk about. Now let's look at why this cheap price is a lie. Global supply is in a structural deficit that is only getting worse. South Africa produces over 70% of the world's platinum. And as the Mining Indaba conference begins in Cape Town this morning, the industry is at breaking point. While profits are up, mine development has stalled. We are seeing a structural decline in output because after a decade of low prices, there has been zero investment in new shafts. The mines are getting deeper, hotter, and more expensive to operate. The energy crisis in South Africa hasn't gone away. It has evolved into a structural bottleneck. When the cost of production rises while the spot price stays suppressed, something eventually snaps. We are seeing major producers prioritizing capital discipline over expansion. They are letting the old mines run out because it doesn't make sense to dig at these prices. This is what I mean by a structural flaw. The price can only stay below the cost of production for so long before the supply simply vanishes. For you, the investor, this is the ultimate margin of safety. So what is the catalyst? Why would the price move now? For years, the bear case for platinum was the death of the internal combustion engine. But in 2026, the narrative has shifted. The hydrogen economy is no longer a future play. It is a now play. Green hydrogen production costs have plummeted this year, beating the $2 target, and we are seeing the first real commercial scaling of heavy-duty fuel cell vehicles. Platinum is the critical catalyst for these fuel cells. It is also essential for the high-end sensors in AI-driven manufacturing and the jewelry market in China, which has just seen a massive bounce back in demand. You are looking at an asset that is industrially essential for the 2026 tech boom, yet it is priced like an 18th century relic. This is a classic money and power disconnect. Now, very briefly, I want to take a moment to speak directly to those of you who've supported this channel with tips and contributions this past week or two. I've been involved in financial services and businesses for over 45 years, and I can tell you that my mission is not about giving you the next big tip. It is about being an ambassador for your financial health. I want to prevent you, or at least help prevent you, from making the catastrophic mistakes that the 98% make when they chase the hot money into a peak. Your support allows us to keep this mission moving, to keep providing the common sense that is so rare in this arena. I'm on a mission to help as many people as possible avoid the hype traps and start thinking like owners of assets rather than watchers of prices. So, why is all this important for you to know right now on a Monday morning? Because the market open is often where the 98% show their hand. They will be looking at silver and gold, trying to figure out if Monday is a buying day or a selling day. Meanwhile, the 2% club is looking at the ratio. If you are sitting on a heavy gold position that has appreciated significantly, you have to ask yourself, does it make sense to rotate a portion into the laggard that is currently 30 times rarer but trading at a 40% discount to its historical mean? This is what prosperity with purpose looks like. It's about having the courage to buy what is quiet when everyone else is shouting. Platinum is the forgotten metal of the 2025 and 2026 rally, but the math doesn't lie. The platinum pivot isn't just a clever title. It's a recognition that the rich man's gold is currently on sale for the common man's price. As we look at the week ahead, keep your eyes on the South African production guidance and the rising demand for fuel cells in the heavy-duty transport sector. These are the silent signals that the mainstream financial media will only start talking about after the price has already doubled. By then, the 98% will be rushing in, and the 2% club will be the ones providing them with the liquidity. Now, if you found this comparison between gold, silver and platinum useful, I want to remind you that 50% of our channel's growth comes from what's known as dark social. People like you sharing these insights via WhatsApp or text messages to your own 2% club friends. If this helped you see the market a little more clearly today, please pass it on. It is how we grow this community of reason. I've also linked our weekend roundup on the screen now, or in any second now, which covers the crucial $80 silver floor. If you combine that analysis with what we've discussed today regarding the platinum ratio, you will have a more complete picture of the precious metals landscape than 98% of the people trading today. So thank you for watching. Stay calm, stay focused on the assets rather than the noise, and I will see you in the next video.